Blue Cloud Softech Solutions is targeting 3,000 crores of revenue in fiscal year 27. So, this is a software products and services company, 1,341 crores market cap, 22.2 times price to earnings ratio. And for comparison, in fiscal year 26, the company produced 1,002 crores in revenue, 125 crores in EBITDA, 13% EBITDA margin, and 60 crores in net profit. And of course, you can compare the growth rate 797 crores revenue fiscal year 25, 502 crores of revenue in fiscal year 24. So the company is thinking of 3,000 crores in revenue for fiscal year 27, and for fiscal year 2028, 30% growth rate year on year. So compared to fiscal year 2027, 30% growth rate in fiscal year 28. Now, the company is also targeting for an improved margin going forward. So 13% EBITDA margin in fiscal year 2026 as seen here. So an improved margin. How much? Not specified, but year on year, I guess they're expecting improved margins. Now, as of now, the company has 1,100 crores in terms of a confirmed order book. And in order to reach from, okay, 1,100 crores of confirmed order book for fiscal year 27. So 1,100 crores confirmed order book fiscal year 27. How do they reach 3,000 crores? By getting more orders, by getting more clients, by getting more orders, executing more orders. Now, 70% of the revenues, I guess fiscal year 26 are recurring revenues. Recurring, 26 to 30% is project-based revenues. Okay, 70% the stable base. The company is now expecting around 100 to 120 crores of depreciation for fiscal year 27 as they move into telecom and as they're establishing their own data centers. The company is establishing its own data centers. One can see here in fiscal year 26, the company had 26 crores in depreciation. And a lot of it is actually amortization, not even depreciation. So their TPE, their property, plant, and equipment, the fixed assets, the tangible fixed assets, they're not a lot, but the amortization, the intangible assets, and the goodwill is massive. So that's why depreciation amortization 100 to 125 crores for fiscal year 27. Around 46% of the revenues comes from cybersecurity segment. So basically, their software product catering to cybersecurity, solving cybersecurity problems. 26% comes from enterprise applications, which is surveillance and safety. Again, the software product and service solving surveillance and safety problems for enterprise. 14% plus from healthcare. So again, the software product catering to healthcare. And last, we have IT consulting. Then we also have a telecom sector, not the last. IT consulting is not the last. They also are entering into telecom sector. And I think that is it. The big target is 3,000 crores of top line fiscal year 27. That is a big number. If they can at least have 13% EBITDA margin, perhaps 40, 15% EBITDA margin, so you can calculate the EBITDA. 100 crores to 120 crores in depreciation. Good to pay attention to that. Depreciation and amortization. And then they're going to start rolling out the data centers also, I think in H1 of 2027. So in H1 or first half of 27, they want to start rolling out their data centers. And the overall data center plans are around, where is it? 100 megawatts of total data center capacity by fiscal year 2032, where they want to have a 85% occupancy in those 100 megawatts ish of data center capacity. And with this 85% occupancy, they're expecting a 45 to 50% EBITDA margin. So high margins. So more or less, is there anything else to say? Yes, 150 to 200 crores of capex for this year. Okay. I think one thing we can mention is that why did margins, okay, why did margins improve in quarter four fiscal year 26? You can see March 26 quarter, 278 crores of sales or revenue, 17% EBITDA margin. Why 17% EBITDA margin? So I guess one of the reasons was that earlier the company had spent a lot of money in setting up the infrastructure for some of their newer planned products. So they were spending money on research, development, and capex on some developing some new products. So money was spent there, expenses involved in actually setting up those new and developing those new products. And finally, productization. Those new products have been brought to market and are generating revenues. So you have set up these like kind of fixed expensive, set up these applications, sorry, infrastructure for these new applications, and now revenues are coming in. So expense has been set up, the big fixed expense for research development and the base fixed expenses. And now you get operating leverage as revenues are coming in from those new products as you have commercialized these new software products. So that is it. Let us see if Blue Cloud Softech Solutions can achieve 3,000 CR in revenue in fiscal year 27. That is a very, very ambitious target.